All right, so welcome back. We're here actually on our third episode of our Smart Money podcast, and we've been talking to Obaid here, who
Okay.
is an extremely experienced Forex investor and basically investor across the board with over 14 years of experience in data science and AI technology, and 12 of those 14 years specializing in the forest market. And so, Ben, thank you for taking the time to join us again. I know we've been having a lot of very interesting conversations regarding just overall strategy and philosophy, and investing philosophies. And when we left off, we were talking a lot about fundamental analysis and why that's so important in any type of investing, really, especially forex, as we're talking about here specifically. So if you want to recap a little bit what we touched on with regard to the fundamentals and why that's so important as we segue into the topic for this part of the series, which I find very, very, very interesting, which I feel that many people don't really acknowledge. Let me hand it over to you, and just to recap a little bit of what we discussed before. Why is fundamental analysis so important?
Absolutely, George. Always nice seeing you, man. And
Likewise.
I'm going to do a quick recap over here. So last time what we discussed in order to create like significant wealth, you do need imbalance, whether it's Forex, stock, or real estate or whatever, right? So Forex is no different. You do need the imbalance. But the best way to do imbalance in Forex and what makes Forex so unique is that we can do imbalance and we can create imbalance in Forex by matching a strong currency with a weaker currency, by literally meaning like matching a strong economy with weaker economy. Then we dive into the way we do it, and the way we do it is called fundamental analysis for Forex. We of course give great preference and great weightage to GDP and interest rate. Interest rate being one of the best smart tools out there for Forex because it's like a daily super dividend added to your account, regardless of whether you're like in drawdown or in profit, right, in that trade. But it's such a like a great just what's beautiful about Forex is not like timing the market, it's time in the market, because the more time you spend in there, the more interest rate you get. And that's a quick recap of what we discussed in our last section.
Yeah, and fundamental analysis is something that you hear a lot about, but today's topic is something that you don't really hear too many people discussing, and that's sentiment analysis. And so, for those that have never maybe heard the term or are not familiar with it, can you explain what sentiment analysis is?
Absolutely, man. And people often ask us, like, if fundamental analysis is so good, why do you need anything else? And that's exactly where sentiment analysis comes. Sentiment analysis basically means like what's the sentiment of the market, but it's a very much numerical than that. First, I want to tell what sentiment analysis is not. Sentiment analysis is not volume or relative volume or the weightage volume. It's none of those three things. Now I'm going to tell you what it is. Sentiment analysis is the commitment of traders, which releases every Friday from the Chicago Mercantile. And they actually have to release behind every currency what's the active trader amount in what direction. So it is, and I think that's why people misjudge it through volume, but it's not. It's actually the amount of actual dollars, actual contracts for the currency. If there is anything like close to insider trading in Forex legally, that would be it. I mean, when you match fundamental analysis with sentiment analysis, is such a huge advantage to you, drops your risk significantly, and increases your profits by a lot. And that's what it is for. But you got to be very careful with code out there. But I hope I explained what it's not and what it is.
Yeah, and so this is something that maybe a lot of people get mixed up. So, would you say that the sentiment analysis is or isn't when you see the big shifts, the big moves that the market makers, is it where the smart money is going? Is that one way to describe sentiment analysis?
Beautifully said. That would be the right term for it. Because when you're looking at the quota data, which is like commitment of trader analysis, when you're looking at that data, that's exactly what you're trying to read out of it. It's a pretty confusing piece of document that they release every Friday. I think they're trying to make sure people can decode it that easily. But if you know how to read it, if you know where to look, and if your math is right, then yes, it definitely tells you the percentage money increase for that currency. And what you can do is like it's not very simple, and that is exactly why I stress upon like please partner with somebody like expert advisors, because when you're reading that piece of document, commitment of traders, every Friday, or depending on Tuesday, some people get on Friday, some people get on Tuesday. When you're reading that, you have to have some coding and some mathematical standardization in place to compare one currency to another. For example, United States is such a big economy. We are 22, 23 trillion economy compared to Mexico, which is not that big. So how do you bring them on the same scale? How do you make sure that you're comparing apples to apples? Maybe a drop of 500 billion in United States might not be looked as, oh, U.S. economy is getting weaker, but a 500 billion drop in Mexico or some other country might be looked as, okay, this economy is getting weaker. So you have to bring it on the same scale. And what I'm very proud to tell you that in expert advisors in this investment fund, we've actually figured out not just the proper scaling techniques, but proper scaling techniques for each currencies when it's compared to another one. And thank God they're not one scaling technique. There's many more. There's standard scaling, min-max scaling, and few other weighted scaling. And thank God for that, because sometimes when you're comparing New Zealand to yen, you're using some other scaling. Sometimes you're using like a US dollar to some other dollar, like some other scaling technique is used. So we've actually built like a whole program around with the expert advisors where we can depend on it, and you can be assured that you have partnered up with somebody that's actually done their homework in this.
Right, and so that's where the manual aspect of the investing philosophy comes in with the coded algorithm section of it. Where, and correct me if I'm wrong, we're taking those
No,
data
you're
points
right.
we see in the reports and we're plugging them in so that they're able to be computed in real time in a much quicker manner than a human could manually make those.
In fact, I have so much respect for those people, for those investment bankers who were actually their entire job was back in like I'm talking about like I was talking to someone who used to work 15 years ago in this industry, and he was telling me that they would like go and transfer all the data in Excel and then copy it, like do everything hand on hand. And he actually told me that it would take them half a day. The moment the data would release, it would take them half a day. And what happens, like sometimes quota data releases a little bit late. And he said, like by that time, we would be like in office like till the very late evening, and their families would get mad at them. And he's like, hey, we can't control this. This is what the latest technology was back then. But we are so lucky. We are so lucky that we're doing this in 2023. We're not doing this in Excel, thank God. We have very powerful tools like Azure Cloud, Python, which complements the Azure Cloud, and the very advanced techniques of data science in scaling techniques and standardization techniques, which has taken us to the next level.
Yeah, and again, that's with the advent of artificial intelligence and all
Correct.
this technology that we have now, it makes that process so much quicker. Now, so far we've talked about fundamental analysis, right? We've also talked about sentiment analysis. So then, where does we're missing one component, which is
Yes.
technical analysis, right? Now, where does technical analysis fall into this, or how do you fit that piece into the puzzle to basically make an overall, winning decision when it comes to the investment?
I loved how you explained it, because that's exactly how you should think about technical analysis. Never ever start with technical analysis. It was invented people has been doing technical analysis since 16th, 17th century, but even they knew that it is always to be done after fundamental. So you're right. Once you know your fundamental, once you know sentiment, then and only then you look at technical analysis. Technical analysis is like, I have done my fundamental, I've done my sentiment. Now let me work out the best entry and exit. That is how you should always think about technical analysis. I don't want to give too many secrets, but we don't use any indicators. We don't use all those stochastic, RSI, which are very like lagging indicators, and they are so good at missing the meat of the move. What we have something much more advanced. It's like based on fractals. The closest thing that comes to it is Fourier analysis, which is also pretty powerful in its wave formatting. So we use those, and Expert Advisor is done a very good job in like capturing that through coding and making sure that once your fundamental and sentiment is done, then we based on those two big concepts, we understand, okay, now let's work out an entry and an exit according to the trend, which gives us the best chance of making more profit in a little amount of time.
Yeah, and it's funny because you made a comment in one of our previous conversations about when it comes to technical analysis, this is data that basically everybody sees. So the smart money is seeing the same supports, the same resistance,
Yeah,
and they know what the majority of the people are gonna do based on that information. And it's almost like they try to reel you in, debate you just enough so that right when you think you're about to maybe hit your targets, 9 times out of 10, or the majority of the time, it goes against you because the smart money is just trying to reel everybody in, and then eventually, boom, they make their move and they go against you just before you
exactly.
hit your target. Well, not all the time, but
No,
the
it
most
happens.
of the time.
It happens so often with people. You're so right about that. And that's exactly right, because the smart money has done their homework. They have done their sentiment analysis. They have read the report of the week for the sentiment analysis. So their fundamental and sentiment, they've covered their two bases. And now they're looking like, okay, like who is everyone? Who are the people on our side, which means who are the people who put the trade in the direction of the smart money side, and who are the suckers in this week or month, like who are the people who are trading on the other side of it, and how we can use them to get most money out of our thesis, which and thesis is built by fundamental and sentiment. And that's how you, and whenever you think about technical analysis, you should always think in the context of sentiment fundamental. Never use technical to tell you which direction to trade, because that can change very quickly, very soon.
Absolutely. Now, is it fair to say that the best way to describe it is that basically we're looking at all this data, which is primarily historical data, whether it just happened or even present data, where it basically just happened, or historical data going back however far you go, whether you're looking at the fundamental or the sentiment or the technical analysis, is looking at that history to be able to predict what the next market move is going to be. Is that a fair description?
That is a very fair description, yes, because those guys, they are also looking, like smart money is also looking at the those levels, but they're mostly interested in like the direction of the volume on that levels. And that is information sometimes you have, sometimes you don't have. If you're a very big bank, you're probably going to have that information better than a retail trader, right? But for the most time, those informations are not available to a retail trader, and to the, I mean, there's only until unless you work with a big bank. And But yeah, you're right. Like they're also watching those levels very closely, and they're watching it way better than us.
Right. Now, obviously, the whole point, of putting all these components together for the strategy is to try to create a predictable investment strategy where, without going into any details, there's certain targets, right, that you're trying to hit as far as whenever you're looking at short-term and long-term projections, and without getting into any specifics or any type of promises or anything like that. I mean, what are some of the targets in terms of, let's say, projected returns that through basically putting together all these tools through expert advisors? Like, what are these targets that you're looking at?
I think very safely, like if you don't want to take too much risk. And when I say risk, you don't want to risk more than 1 to 2% of your account. You can safely make like 3 to 5% every week. And this is not counting the super dividend you're going to be collecting every day. And I mean, if I'm trading, I'm going to make sure that at least all 200 trading days of the year, I have at least 1 to 2 trades always in there to like gather the dividend. So 3 to 5% every week plus the daily dividend which you're going to be getting. It comes out a pretty nice sum, and it can really those gains, they multiply pretty fast. When it's accumulative.
Right, and it's about that consistency and making sure that you're constantly monitoring all these different data points and keeping everything in balance between the fundamental, the sentiment, and the technical analysis.
Correct. Yeah.
Yeah, and I think that's one of the best things over at Expert Advisors, collectively as a group, as a team, everybody putting in their part. We've been able to really put together a solid strategy. To try to maintain these type of consistent results on the projections. And so, I mean, and we're kind of running short on time a little bit. So, but before we go, I mean, what would be the main takeaway that we want the viewer, someone that's watching this part of our series, what is the main takeaway that you want to leave them with?
The main thing I want to tell everyone is, like, if you're like a serious investor, in your head that you're already looking for an imbalance. So you should definitely look at Forex, because in Forex you can create that imbalance at any given time and moment. Because at any given time, one currency in the world is doing very good and other currency in the world is doing very bad. So that should tell you that there's a huge opportunity here. And you don't. I mean, if you're watching this, the good news for you is you don't have to do this on your own. You can definitely partner up with a good hedge fund and a good proprietary fund like us, like Expert Advisors, where we have done all the homework, we have done all the work. So you can definitely stand on the shoulder of giants here. So definitely worth looking into. And if you're just an investor, doesn't matter, Forex investor, I I humbly ask you to please do your fundamental, sentiment, technical in that order, so that you don't lose your hard-earned money. Because at Expert Advisor, we really do have a heart that the money that is invested into us is quite hard-earned, so we don't want you to lose that. So even if you don't want to partner with us, that's fine, but at least don't put your money at a blind risk, please.
Well, there you go. I mean, very, very wise words from someone who is, has well over a decade and in this space. And on the next episode, I want to talk a little more about how someone can partner up with us and what that will look like. And in the meantime, though, if you have any questions, you can always reach out to expertadvisor.com to the contact us section, and we'll be happy to provide more information at expertadvisorconsulting.com. So, well, thank you so much, Obaid, for all your time today, and looking forward to our next installment.
Thank you so much, George. Always fun talking to you, my man.